Ladies and gentlemen, welcome back to the Crypto 101 podcast, where we get to talk all things cryptocurrency. No matter where you're tuning in from in the world, you're certainly in the right place today, because here we are getting to interview Paolo Ardoino. He is the CEO of Tether. He used to work as the CTO over at Bitfinex before moving to Tether last year. And man, Tether really needs no introduction. So Paolo, we're excited to have you here and welcome.
Thank you for having me, and I'm very excited. I have listened your podcast, so thank you for having me again.
Yeah, well, we're fans of you and everything that you all have built over at Tether. You've been working in the crypto space for a while now, and Tether really needs no introduction. But for the people who maybe just are not as aware, Tether is one of the largest cryptocurrency projects out there. It's the third largest crypto by market cap. They are the largest stablecoin by market cap with over $120 billion in market capitalization. They've been around for a long time. So we're excited to not only talk about like the state of crypto and how it's evolved over the years, but really what's happening in the current day. How has the landscape changed, and how are we moving into a new era of not only stable coins, but crypto as a whole? So, Paolo, before we begin here, what got you started in crypto in the first place?
I started in crypto in 2013. I was I've been a software developer all my life. I started coding when I was 8. Um, for me, coding was a way to just create, or was a form of art, right? So many people are good in art, like you can draw, you can paint, and it's a way to express yourself. For me, the software development was that. So that accompanied all my life. I went to math, applied to computer science university, graduated there, spent 2 years as a researcher for peer-to-peer telecommunications research. And then, as many times happen in Italy, you then don't get paid much. So I, especially as a researcher, it's very sad. Well, anyway, researchers should be paid more in Italy. just that is my bottom line. And so I moved to finance. I went where I could find maybe a bit more money. Kind of obvious choice. So I started learning about finance when in a way that is kind of unconventional. So I started learning it, coding it, right? So I started working with different hedge funds and banks that needed portfolio management systems, order trading systems. And so I coded from derivatives, options, spot trading, bonds, everything, and all the different calculations that you need around those. And so I became very, very expert in the matter. And then 2013, I came across the Bitcoin white paper, and my mind blew up. Um, Especially because I was into finance, so I really liked finance. But in the end, I also liked the peer-to-peer decentralization, extreme resiliency aspects of what I was doing as a researcher at the university. And hence Bitcoin kind of unified the both of them, right? On one side you have the financial innovation, and on the other side you have blockchain, that is the technology that brings this incredible resiliency and independence to a new financial system. So I was really, really mind blown by that. And so in 2014 I had the opportunity to start working for Bitfinex, just a couple hours per day doing consultancy. And a couple hours per day turned into like 16 hours per day, and then I became the CTO of Bitfinex in 2016.
Wow. Yeah, it's funny how things work. You step one foot into the crypto markets, you look at one white paper, and then next thing you know, here you are. But you mentioned that you've been in crypto since 2013. It's a long time. It's earlier than most listeners, most investors. And the landscape has really changed a lot since back then. I mean, when we started off with just Bitcoin, it was a much more simple model and landscape. We didn't have all these different verticals. We didn't even have DeFi yet, let alone like the gaming industry and decentralized physical infrastructure and RWAs and tokenization and privacy and all these things that we've seen. And so it's been really cool to see the crypto landscape adapt. But I'm curious, do you think that the game plan or maybe the model has changed over the years to adapt to the crypto industry?
Yeah, I mean, when I joined, I felt like cryptocurrency exchanges were mostly e-commerces for Bitcoin, right? So, they didn't have any advanced trading feature. Coming from traditional finance, I mean, it felt like, going on a bicycle when we were used to run the Formula One. But it evolved very rapidly. With 2013 was the first year Bitcoin went above $1,000 in price, and over time, then we had 2016, end of 2016, early 2017, there was the ICO boom. So a lot of projects were raising capital, for, I remember when raising $250,000 for your startup was a lot of money and was really hard work. And then you could see in 2017 projects raising $25 million with a pinky swear and a white paper long 2 slides, and was kind of crazy. But that was very. I think, of course, now is easy to speak, but for any great new industry, you have the first time at the beginning, no one cares about it. Only the nerds and the geeks are caring about it. Then you have the initial mass adoption that usually go badly, right? That is where there are incidents, like at the beginning of the car industry, right? So, there was no safety measures, there was almost nothing, and so you started having accidents, and hence regulators started to put rules for cars and have a proper guidance, laws, and so it really happened. The same thing that happened in every single other very important industry, and definitely that it made it change. We had the different blowups in 2022. We had FTX,
Yeah.
that was the darling of the industry in a way, that showed how in just 10 years the crypto industry could replicate the traditional financial industry that was so much hated by the crypto industry, right? So learn really really fast, I must say. So I think is if you look at the evolution from some distance, you could see um, you could see in very compressed time frame many of the happenings of the tech plus financial industry over the last 100 years in just 10 years.
Yeah, definitely. And it's been cool to see the entire space kind of grow into what it is today. But stable coins have come a long way. And so for the listeners that are out there, they probably have some sort of interaction with the stable coin. If you don't know what it is, essentially this is a coin that is pegged to a fiat currency. Most commonly, they're pegged against the US dollar. So it's a coin that stays at $1. And there's a bunch of different ways that it can be done. And I want to hear from you about how you all are doing this at Tether. But I also want to hear about maybe some new developments and how stable coins have evolved from kind of their inception into the modern world of crypto that we have here today.
Yeah, I mean, Tether was born in 2014, and Tether is the company that created the entire stablecoin concept. And the idea was very simple, although I mean it's a genius idea,
Yeah.
especially nowadays how it developed now. But it was actually incredibly simple, right? 2014, the landscape of crypto was completely different. We had today we have hundreds of exchanges, like thousands of exchanges. In 2014, there was like 10 or probably less that were relevant: Bitfinex, Coinbase, Kraken, Bitstamp, BTCC, OK Coin, and maybe one or two more. That's it. And all these exchanges were international to each other. That is very relevant because for any for any financial market that develops and wants to professionalize, you need certain functions. You need market makers, you need fast trading engines, you need proper settlements, and you need a function that is called arbitraging. So the arbitrager is the function of a trader that sells Bitcoin on the exchange where the price is higher, takes the dollar, move the dollars on the exchange where the price is lower, use those dollars to buy Bitcoin there, and then move those Bitcoin back on the exchange where the price is higher, and rinse and repeat, right? Simple as that. That function is very important because it creates a pressure, a market pressure to align the price of Bitcoin across all the different trading venues. So that was not possible in 2014, right? So you had all these exchanges, few number of exchanges, but in order to move Bitcoin from one exchange to another, you could it would take 10 minutes, right? The Bitcoin block time is around 10 minutes. But moving dollars would take a few hours, few days. There was the weekend. All trading opportunities were gone by the time you could actually lend your dollars on the other side of the world. And so the idea around the USDT was, we have why we cannot put USDT on Bitcoin? That was the first question. But actually, the question was why cannot we put US dollars on a blockchain, right? So and use the same technology that moves Bitcoin just to move the dollar. So we move Bitcoin at the same speed of dollars. Everyone is happy. It's very efficient. We can have our own nice, efficient market. And for the first 2 years, no one really understood the power of this idea. So really, we tried so hard to explain it, and no one understood it. And then 2016, there was an exchange called Poloniex, end of 2016, that started adding USDT to against all the other cryptocurrencies as a digital dollar. And that demonstrated that Bitfinex and Poloniex have been the only two exchanges that had a digital dollar. The volume was much higher than anywhere else because the traders, the market makers, the arbitrageurs could be much more efficient. And so then every single other exchange started to look at it. In 2017, Binance was born. And Binance didn't have dollar rails. They had only they started with USDT only. And all the other new exchanges that were born since 2017, they follow the same pattern. Now, until 2020, USDT has remained the main tool for cryptocurrency trading settlements. But in 2020, something different happened. That was the pandemic. The pandemic really crashed the economy of so many countries.
Yeah.
I'm Italian. Italy was definitely not prepared for that, and was not already doing great. But after that, many job losses. Same happened in Europe, by the way, and same happened especially in emerging markets and developing countries. But also, apart the job market, you had another big issue that was the devaluation of national currencies and the inflation that started ramping up. You look at Turkey, you look at Argentina, you have all these countries, their national currencies started to deplete, to devaluate very, very fast against the dollar, even faster than before. Right? The Argentina peso lost 98% of its value against the dollar. The Turkish lira 80%, if not more. So all these issues. Think about the fact that there are 5 billion people live in high inflation countries and 3 billion people that live 3 billion people that don't have access to banking, right? Not because they are bad people, just because they are too poor of being of interest of a bank because they don't generate enough fees. So all these people, all these communities around the world started looking at an alternative. They didn't want to hold and sync with their national currencies. They had to protect their families. They had to protect their wealth. They worked all the year, not and they needed to accrue some savings, and yet they couldn't. So the first answer would have been, oh well, let's buy some dollar cash in some alley in the black market. that's not what should be done in 2020, right? So, but with the local regulations and with local exchanges, USDT became the digital dollar for hundreds of millions of people in emerging markets. Right today, we count more than 350 million people using USDT as their digital dollar. So I don't even consider USDT a cryptocurrency almost anymore, because it's actually the digital dollar for Argentinians, Turkish, Vietnamese, and you name it. Right? It grew beyond our expectations by many orders of magnitude.
Yeah, and I definitely want to circle back to that because we're seeing exactly that. And this gives people a much more stable alternative to interact with the crypto space, where they're not subject to a lot of that volatility. But we're still seeing the stablecoin industry grow, and we're seeing just a record growth. I saw that Tether recently broke $120 billion in market capitalization. And again, this makes it now the third largest crypto, and it's about 3 times the size of the next largest stable coin in line here. So, like, what goes into growing the stable coin space? Because people go, oh, if it's grown, by all this much, but price doesn't move, like, how does that work? When in reality, there is kind of like a mechanism that works in the background, right? That supports these Tether tokens to be able to hold its price with the market cap actually increasing.
Yeah, so I think there is a lot to unpack there, right? So I think that the reason why USDT market cap grew so much to $120 billion, despite the price of Bitcoin didn't and other cryptocurrencies didn't really move that much, is because really a shift on usage. I mean, it's kind of sad to think about it. What I'm going to say is that I wish I could tell you, well, Tether has, figured everything out and was super smart, and we are super smart and beautiful, hence everyone and the entire world is using us. And that part might be true, but the reality is that the success of USDT is directly proportional to the success of many economies around the world, right? So I was reading different articles. Even government research is in Central and South America that were stating that USDT has become the savings account of a good portion of the population there, right? So if people are holding USDT not because they are trading or doing DeFi, sure, they are doing that as well, but from 100% of being true, this usage of USDT for in crypto up to 2020, I would say that as of today, more than 60% of usage of USDT is actually in the real world, right? People holding
Wow.
onto it. And that is, in my opinion, the best achievement, the realization that people are using our product because they feel safe in using our product because it's helping their day-to-day lives. That is the best outcome and the best success I could claim. Right, crypto is great, but when people are using your product for to protect their families from inflation, that gives me a different feeling, honestly. But that's one of the main reasons why this is happening is because we, over time, despite all the different attacks from traditional finance and so on, we have been proving our resiliency. In 2022, when the entire or many in the crypto industry
Yeah.
were falling, USDT and Tether have been the safe haven for basically the entire industry. While critics were accusing us of bad things, and I really want to be transparent and open here. We actually were the ones that were able to pay back to our investors and to people that wanted to withdraw, that wanted to redeem, tens of billions of dollars in a matter of few days. Right, $7 billion were paid back in 48 hours in 2000 was May 2022, and $20 billion were paid back in 25 days. That was 25% of our reserves. So there is no bank in the world can sustain more than 10% withdrawals from the account holders. Think about Silicon Valley Bank last year in
Yeah.
2023, almost killed our main competitor because they had uninsured cash deposits in the bank. Silicon Valley, Silvergate all blew up. Then New York Commodity Bank this year, Credit Suisse. So that's something. So people are looking around themselves, and they see the banks, and they see that banks can lend out up to 90% of their reserves, and so they cannot resist to more than 10% of withdrawals. And then they look
Wow.
at our reserves, they look at our attestations, and they see that we hold 104% of assets, not 10%, 104. So of course people are choosing USDT as their dollar because they know that we are basically a fully reserved bank.
And so when you say 104%, we're looking at the $120 billion market cap. Does that mean that you have all of that in reserves of some sort? I'm sure it's diversified between cash and maybe bonds and other stuff, and I'll let you go into that. But that means that you have the reserves for all of that plus a little bit more at 104%.
Yeah. So in the last 2 years and a half, Tether made around $12 billion in profit, of which 6 billion and something are kept uh, within the reserves. So Tether has 100% of assets to cover all the outstanding tokens, right? So we have 119.2 billion of issued USDT. Then we have enough reserves to cover those. But we decided, the shareholders of Tether decided to not take much out of the company, of those profits, of those 12 billion profits, right? So we could have, any Silicon Valley Bank company, any other company, almost any other company would have taken out, 50,
Yeah.
60, 70, 80% of those $12 billion. We didn't take out much, actually. The vast majority, the vast, vast, vast majority is within the company, because the right thing to do when your product is used by 350 million people is to show that you are taking it very seriously. So we kept 6 billion of those 12 billion in additional reserves, in excess equity in the reserves. And the remaining 6 billion are being invested through a different vehicle in very important initiatives through biotech, telecommunications, investing in infrastructure in Africa, investing in artificial intelligence, all based on our philosophy, all based on our ethos. So we are very proud of also that side of the business.
Yeah, and I love that point because when people think about the crypto markets, one of the biggest misconceptions out there is that cryptocurrencies are coins without purpose and that they don't generate profit. And in reality, it's almost funny and ironic because that couldn't be farther from the truth. In fact, there's a ton of projects. Most projects have the goal of producing revenue and profit, and we've seen that. I was looking at some metrics just the other day, kind of like what you were just saying, but I saw that Tether did around $4.5 billion in profits in Q1 of this year. And when we compare that to other very large asset managers like BlackRock, I saw someone running the numbers on this. I guess you'll have to tell me how accurate it is, but they're saying, hey, Tether did $4.5 billion in profits in Q1, while BlackRock only did $1.5 billion of net income in Q1 of 2024. And then they go on to compare and say, hey, that Tether did Tether in Q1 was 3 times the net income of BlackRock. And while Tether has 150 employees, that's about $300 million in profit per employee, whereas BlackRock has 19,800, almost 20,000 employees. Which, if we divide that out, that comes to about 75K of net income per employee. And even in the last 180 days, we can go to sites like Token Terminal, for example, and we can view the revenue of most projects, which I think is super awesome just because we have that transparency. And in the last 180 days, we can see how profitable and how much revenue has been generated from different crypto projects. And in that last, half a year here, the last 6 months roughly, Tether's been number one with over $1.1 billion in revenue. And then you have other things like Tron and Ethereum and Circle and Maker, which is now Sky, and Solana, and other things that are trailing behind it. But this narrative that the crypto markets and these projects and all projects don't produce revenue is like the complete opposite of the truth. And when we break this down and compare it to what we would look at as some of the most important and largest asset managers out there, the numbers still look really good.
Yeah, look, I mean, it's we started very early, and definitely in crypto there are many good projects that are actually generating revenues. They also, not only that, right? They are innovators. Right? They are every month they are focusing on building new technology that then eventually will be adopted also by the old guard like BlackRock and JP Morgan and of the world, right? So I think is our flexibility, our ability to focus on technology first and provide and use the power of blockchain actually to optimize our workforce. Is almost unprecedented, right? So when here's the thing: if you are like a traditional financial firm, even if you are like a traditional bank, you don't have everything is obscure to you. It's a very big black box. So how the Swift system works, how money moves, as soon as money moves out from your bank, you lose track, right? So it's then there is cash. There are so many different things, but with blockchain, everything is transparent. Everything is out there. The beauty of blockchain is that it's a distributed ledger that no one can change ever, right? Will remain like that for the rest of eternity. You can build great things on it. You can build compliance tools on it. That's what we did. We can reduce the costs and the overhead by orders of magnitude because we are using a modern transport layer for money. And I remember that I started saying how I entered being a developer for the traditional financial world. It feels that the finance didn't change its technology layer for the last 40 years. So they are keeping adding rubber and bands, right, and patches and chewing gum to fix holes and trying to sustain things. But basically, it's like instead, Tether and other companies in our industry, they jumpstart to the latest version of the technology, and it's like pretending to fly on either like a super fast jet propeller or using like a single wheel airplane, right? So of course if you adopt the latest technology, you will be able to be faster, have less costs, like more security, and that's what we need. It's not really rocket science, but I guess that for traditional financial firms trying to throwing away everything that we build in 30 to 40 years is very, very dangerous, and they are scared. But being scared is not a solution to progress and the technological advancement.
Yeah, I mean, I think that raises a solid question too of, is Ethereum ready for the masses and what will that look like? Is it people transacting entirely or primarily on the Ethereum main chain, or is it with the support of like layer twos and layer threes?
Yeah, I think, look, the throughput is a very important metric, right? So I think that having multi-layer is very important. There is Bitcoin has Lightning Network, and Ethereum has a dozen, if not more, of layer twos. It's scalability has to go in this way, right? Through layers. Each layer will add certain constraints and certain trade-offs in terms of security, flexibility, speed, but that's basically it's about physics, right? So there is no magic wand. There is a finite number of things you can do on a modern CPU or GPU, whatever. So you need to find different ways to scale, and layers is historically is the only way to make it safe and sensible.
Well said. Well, I want to talk about Tether's kind of recent expansion into AI and peer to peer technology. So I was hoping you could tell me more there.
Yeah, I mean the the realization around Tether is the concept of disintermediation, right? Tether is a centralized issuer for sure. But one thing that actually Tether did was removing unnecessary intermediaries uh, when it comes to money, right? So before money had every time you did a transaction, you had tens of intermediaries that would manage take care of your transaction and take a small fee out of it. And many small fees are a big fee. But what we did is exactly using transparency, using blockchain, we could basically remove all intermediaries minus one, that is us. Now, that realization combined to another realization that I had a long time ago. That is one of the reasons why I like Bitcoin as well. Is that I'm a big fan of sci-fi. I'm a big fan of coding. I think that um, tech is has been very fundamental in all my life. I spent so much time into that, and the the realization that I don't hear much around, unfortunately, from others. But my personal realization is that technology has been built for the best case scenario. Technology today works only because the world is mostly at peace. Because although there are some wars, uh, the world still is mostly at peace. But in a world that either is not very much at peace or simply there are other catastrophes that could be natural catastrophes and so on, technology that we have today, 99.9% of technology that we have today will fail. So imagine the concept of using WhatsApp or Signal or like Zoom or any other communication system. For imagine like I'm Italian, right? Imagine that I live in Rome and most of my family lives within 100 kilometers from me, right? Um, and 90% of the people in the world live with high probability within 100 kilometers from their families, right? So if all those people, right? Again, let me go back to the example of Rome. I'm in Rome. I send to my mom a message on WhatsApp. That message goes to Frankfurt and then go back to Rome. Imagine doing that multiplied for all the messages, all the photos, and all the video calls and everything that we do. Imagine how much waste and how much unnecessary information we are moving across countries for thousands and thousands of miles. Because of what? Because we are doing this because big tech companies need our information to travel to their data centers so they can milk out information and sell it. But the reality is that humanity is trying to go to Mars, and yet we think that we need those data centers to communicate to each other when internet was born to be point to point, was born to be peer to peer. So I think that we need to start working on technology for the worst case scenario that will work when we need it the most. Because when we'll need it most, the current technology will fail us. So that is basically the build for apocalypse theme that I started with Tether, right? So how we can take technology, how we can build technology that that is peer to peer, that telecommunication systems that are peer to peer, that allow us, and we launched Keep that is still in beta, very early beta, that showcase how you can have a Bitcoin room on Keep where 1.7 thousand people are talking to each other in real time, sending photos and memes and whatever you have in, and without any servers in the middle. You can have direct connections with your friends and family, still sharing any sort of data without any service in the middle, with full privacy, with the best quality, because you remove latency if you don't go down, if you don't travel thousands of miles to go to a data center of Google or Meta. So that to me, as a developer, as a sci-fi fan, as a person that understands that a dystopian world can happen, that's where I wanted to use part of our profits as a company to focus on. And AI, why focus on AI? We spend more than $1 billion in acquiring the majority of a company for Northern Data that has more than 20,000 GPUs, comparable in the same order of magnitude of Google and Amazon. The reason is that AI is already political, has already been used for trying to steer political discussion. And it's a technology that started just a couple of years ago. So imagine what not started a couple of years ago, but the mass adoption of AI started a couple of years ago. So imagine how bad can become. So we want to build AI tools, and we want to give to companies that want to remain independent AI infrastructure access. So if I have to summarize our concept of around Tether is in three words: disintermediation, independence, and the resilience. So that's what is Tether today.
Yeah, and a lot of this is kind of ushering in the next era of adoption. And that's been one of the coolest things. And I always think that this is one of the coolest things that we get with bear markets is that we get so much building. We're not really in a bear market anymore. You know, we hit all-time highs a couple of months ago, but kind of over the last couple of years, we have seen so much get built, so much infrastructure that allows us to be able to do all the things that we're talking about today. And it's been months and years of work kind of leading up to this point. And the crypto markets are just ever growing as well, and they're decentralized. And this is something that you were talking about earlier, and I want to circle back to it. But Tether's had some cool initiatives here, especially when it comes to emerging markets. I know it's easy that we see news headlines about, oh, well, what's happening in the US or what's happening in Hong Kong or what's happening in these really big markets. But Tether's had some really cool initiatives here when it comes to emerging markets for crypto adoption and education and financial freedom and other stuff like that. Specifically, when it comes to Africa and Asia and other places. So I'd love to hear about some of the initiatives that you're working on there and why you're choosing to do it.
Well, I think the way I describe it is that I think rich people in wealthy countries have had it all, right? So they don't. The way I describe it is also for USDT specifically is, there is no point in selling USDT to into US because to me is like selling an ice bucket to an Eskimo. Right? In US, you have already 10 ways to pay people, like Venmo, PayPal, bank accounts,
Yeah.
credit cards, FedNow. People took $1.4 trillion of debt on the debit cards. So there is no way to do that with stable coins. So I think the way I look at it is that we need to. I think the promise of crypto is to bring more fairness in accessing financial services, and for that reason, we need to start from the people that need it the most. Right?
Mm,
Our even on our stablecoin competitors, they always focus on Wall Street type of connections, right? So let's go to other bankers and have their product used by them to ramp up quickly the market cap. But that to me is not that to me is not interesting because the problem with bankers is that they will betray you for 1 basis point, right? So you build everything and then they will just look at the better option, and that's not that's not what that's not solving any issues, right? So when you create a product, the most important thing is the product market fit. You want to make you want to know, you want to understand really well who is your audience, and ask yourself outside the US, who are the people that need a
yeah.
dollar, right? Who wants the dollar? And if you go in Argentina, if you go in Venezuela, if you go in all these countries, and if you ask them, would you prefer a dollar, a euro, any other currency, your national currency, they will always say the dollar. And
Yeah.
there is a good reason for that. And hence we have an answer. The answer is very simple, right? There are
Yeah.
5 billion people of potential customers. So 5 billion customers are, the holy grail of any company. And right now we are at 350 million users. There is still more than 10x to grow, and that's our simple math, right? It's a simple realization, but it really unlocked our success.
Yeah, and I can't tell you how many times I've talked to people and they go, why would I use blockchain tech? Why would I use cryptocurrencies when I have access to all these different apps in the US? If I want to send money, if I want to store money, I'll go to a bank. I'll go and get PayPal. I can go and get Venmo, and I have all these other sources. And the real kind of I guess, answer there is that, well, we might not be the biggest target audience. A lot of this tech, exactly like you were saying, can be for people who aren't as fortunate to have 100 different financial options at the opening of their phone. And not everyone in the world has access to that. And so this is about giving access to that. And also, of course, supporting other markets that are more fortunate, and building on them, and adding to them, and kind of bringing them to their next stage of the evolution. But the other side is just kind of expanding everyone's thinking and saying, hey, just because this might not apply directly to you, you're one person in a couple billion person world. I think there's like 8 billion people in the world right now, or something like that. There are a lot of other people who aren't in the exact same kind of situation as you, let alone, monetary guidelines and all these other things that go into it. So I love that point, and kind of looking at the bigger picture of how this stuff can be used in the bigger audience around the world, because it really is a massive one. And so, before we let you go, Paolo, Tether's growing at a rapid rate. The crypto markets are growing at a rapid rate. Do you have any thoughts, just I guess overall, about the state of the market, and kind of as we're heading into 2025 here? Is there anything that's sticking out to you?
Um, I think we are growing. I mean, it's interesting to see people growing from very startup style type of industry, like the crypto industry, to become more and more institutionalized, right? So ourselves as well. So I think it's fascinating. It's a fascinating realization that we sometimes we might want to go back to the roots, just because it was quite exciting in a different way. Almost was exciting in a different way. You know, in at the beginning, no one cared about Bitcoin and what we were doing at Tether. Then, people started to do notice, but dismiss it. Then they started to attack it, and then eventually they started to embracing it. And that happens to crypto in general. So we are now at, especially since this year with the BlackRock ETF and the in general ETFs and all the other changes, we are at we made it, right? That is the realization. We made it. We Now
Yeah.
what, right? The question is, okay, we fought so hard, and now what we are fighting for, right? What is the next step for our industry? Is going to be boring? I don't think so. But we need to be prepared to shift gears into something that is very different from what we had a few years ago.
I agree. And I'm excited to see what the future holds. And if there's any listeners out there that, they want to follow you, they want to get plugged in, where can they find you at?
I'm on X, Paolo Ardoino, so name, surname, all attached. I make memes and take good care of my companies.
Awesome. Well, we love to hear it. We look forward to seeing more of you. And we can't wait to have you back on here in the not too distant future. But Paolo, thank you so much for joining us.
Thank you for having me.